Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
So let's have a look on the gold market. It looks more fascinating compared to euro currency, where actually nothing is going on. So investors just waiting for new drivers to do something on the euro. But in general, as I already talked about this in today's video on euro, we have really great picture on 10-year bonds, which is looks supportive as for the euro, as for gold, and in general could be some sign of the rising recession tendencies in the United States economy, or at least it may be just an indicator of the recession fears. Because if we take a look on 10-year bonds, we can see on the monthly chart what's going on. We have big evening star pattern on the monthly chart. So by itself, it suggests some kind of the A, B, C action later, and yield could drop back to the 3.7, 3.6 area, back to these lows. It's a significant drop, and as you understand, there will be big pressure on the Fed with attempt to cut the rate. So it's already pressure stance, as we shared yesterday in Telegram. The probability and expectations on the market that rate will be decreased in the May meeting rises 2 times, and now it's about 48%. So previously it was around 21% 2-3 weeks ago. So this pressure on the Fed is rising. Obviously this is supportive, so you could see how gold is happy due to the recent low CPI and due to some stronger efforts of Russia on the battlefields. So all this stuff brings some uncertainty, increased tensions, and correspondingly supports gold. So our suggestion that gold is really bullish and we should not withdraw the bullish setup yet. As you can see, this feeling was not deceived, and actually market it has worked. So market has dropped up and break up the flag consolidation. For now, take a look. What is the really trickiness stand around the current moment? The trick stands in the 2 points. First, you can see that the MACD start flirting with the price. So here we could get the grabber. This is the first thing that we need to keep an eye on. So if we take a look, where's MACD stands, right, it might be today, maybe tomorrow. So we have still 2 sessions and grabber might be formed. First point. Second point is gold likes very much to form 222 patterns on the top in the moments of the reversal, and here we exactly have 222 sell pattern. So appearing of the grabber simultaneously with the 222 shape, it's definitely a thing that we need to consider and we have to pay attention to. That might be really very good setup for attempt to take the bearish position. Yes, maybe it has no big probability of success, but take a look, the risk will be minimal. So we will have to play stop slightly above this area. It will be very small risk. But if we succeed and market indeed starts dropping, I don't know what the reason for that will be. Obviously that will be some geopolitical events, maybe negotiations, maybe something else. But this is a setup that we have to keep in mind. Currently, everything looks bullish. Everything stands great. Maybe market will keep going higher. It's what we really would like to get. But my experience tells that 222 on the top is always the warning sign, because this is a specific feature of the gold. It likes to form 222s on the top. So let's just keep in mind this moment. On the 4-hour time frame chart, if everything goes on the classical way, as it should be, so breakout of the flag, we have the acceleration. Here we could consider a few targets. All of them stands relatively in a tight space. So first is the upside OP, which will be around 29.78, probably 29.77. It's a ABCD target. But at the same time, we also could consider the butterfly. This butterfly target stands at 28.90. So it means that area around 29.80, 29.90, it will become the next upside destination point. Currently, market stands at the minor extension. This is COP. So all things that we talked about, the hand shoulders pattern, big hand shoulders, right arm hand shoulders, actually works. It looks nice. On the hourly chart, if you were following with this setup, currently you have no problems probably with this position. You could manage it by yourself how you would like to, protecting with the break-even stop and just make some other things that you need to do. But currently it stands in positive area, so it is not the problem to do something with it. So returning back to the shape of these minor hand shoulders that we talked about yesterday also, its target stands around 29.50. So for today, that's probably might be next destination point. Today, tomorrow, so nearest targets. Also, what things that we need to keep an eye on? Personally, I think that 29.20, it will be a very important level. With this upside breakout, market turns to and comes to next trading range. So if you will take a look at the chart a bit differently, so you could see how it was. First, this range has been formed, then another one, drop, return and back up. So you also see natural border, right? So market has broken it and returns back with this type of action to this trading range. You can see that they're trading equally in this area. Then it dropped out by the fundamental reasons, some external impact market, and returned right back up. Then, when it has broken it yesterday, it turns to the next area for trading, so which stands around 29.20 and up to the top. Now it could float around it. So the things that bulls do not want to see is drop out of this range. So that's why I think that 29.20 area, you can see this shadow slightly overlapping here and here. So some gray area exists between 29.20 and 29.25 approximately. But that's why I take the conservative area at 29.20. So we do not want to see that market is drop out. So I would treat it as an invalidation point for a short-term bullish context. It would be perfect if market will stay above this area, 29.30. That will be just perfect. But that's still the area that is more important. Until the market stands above it, it keeps bullish scenario and it's possible to move further to the upside. So currently, correspondingly, if you would like to take the position, you have missed or haven't taken the position here, you could consider some retracement back to this area, but without the breakout down. So some deeper retracement, if it will happen, you could consider to maybe taking the long position as well. So, but be careful and calculate the risk-reward ratio, because you could actually, OP stands rather close if we speak about intraday trading. And for example, here, a risk-reward will be negative or below the 1 to 1, so less than 1. And that's why it's not really attractive. You need to wait some retracement where you could get the risk-reward better than 1. Or better to say, not risk-reward, reward to risk, above the 1. So, but you understand what I'm talking about. If you will not get it, then market just will keep going higher. Well, in this case, it hits the OP, then you have no options but to see what will happen around the top and what market will do with the daily grabbers. At this point, it is a bit risky to consider taking new longs position, or you will have to use another tactic, for instance, using, I don't know, kind of the breakout stop orders, aiming on the possible upside breakout, and that the grabber will not be formed on the daily chart. So it will be different strategy. We will speak about it when time comes. But for now, just let's see what will happen. Currently, we have normal positions. This is our next destination point, and next step will be to consider and monitor how market will challenge the previous stops.